Good morning, Jags. This is Fahad. Good morning, gang. How's everyone doing?
Doing good.
Doing
Another
well.
early riser and
All right.
end of the week, long weekend.
Yeah, looking forward to it. Some nice weather rolling in Michigan as well. So I'll be enjoying my swimming pool with my family all 3 days, next 3-day weekend. It's been a very active week. So looking forward to just taking a break and just having a good time. Okay. I guess we're still watching the 200-day on the S&P, or just going to be watching it forever. If it happens, if it happens. If it doesn't, we'll know. I don't have anything else to add to that anymore. This 3,000 wall continues to be in play. So I'm looking at Alibaba this morning, and I am sort of glad that the stock is rather flattish. You know, it was down, then it was up slightly, and now it's slightly down again. Call it just flattish, a few percentage down now this morning, rather than completely going up or down, because there's a couple things. First of all, in the first read this morning, this quarter is actually really, really strong, much better than my expectations. Now, this was to be expected, but take a look at the total revenue growth of 16.1 billion versus 15.2 billion estimate. A very sharp beat on the earnings per share, $1.30 versus 86 cents estimate. Margins were very weak, and this has been the scenario that we have seen with a lot of e-commerce plays recently. So I think that is weighing potentially on the stock. The mobile monthly active users was very, very strong and continues to grow year over year each quarter. And I think there's still a lot of room for this to grow. It should get to 1 billion or such. But overall, a very healthy quarter. Cloud was strong, e-commerce was strong. The question really comes down to, when we're evaluating Alibaba here, is really twofold. One, whether this bill that has been introduced by the Senate and is going to go in front of the House very soon about delisting of Chinese, does that warrant lower multiple on some of these Chinese stocks? Because then we need to evaluate them in that box where the risk has slightly heightened, and so we need to see whether they can further see multiple expansion. But perhaps even more important than that is this is the Hong Kong potentially changes in laws that have been proposed by China last night, which caused a huge sell-off in Hong Kong overnight, down 5.6% in one time. And across the board, South Korea was down, China was down, and then some of that weakness spilled into European countries as well. I do not know how that changes the table. We need to figure out a lot of that. Chronicle, you studied all of this overnight. Any thoughts on this?
Yeah, so two key pieces of news from China, actually. First of all, I'll touch on how Beijing has officially abandoned its growth targets. They did release inflation and unemployment rate targets, 3.5% and 5.5% respectively, but no growth target. For reference, the target last year was 6% to 6.5%, and now consensus forecasts for 2020 are currently at 2.1%. And on top of that, their budget deficit target was widened to more than 3.6% of GDP, which would imply a significantly larger shortfall than last year's target of 2.8%. They also introduced measures including ongoing value-added tax cuts and a further 500 billion yuan in tax reductions. Meanwhile, in an effort to help finance infrastructure investment, local governments will be given the green light to issue 3.75 trillion yuan in special bonds. But this figure is pretty disappointing because consensus was expecting 4 trillion yuan. So this goes back to what I wrote about in the BHP research piece. China simply doesn't have the gunpowder to bring out the big bazooka like they did back in 2008, 2011, and 2016. Based on earlier reports, it would seem that a lot of the allocation for residential properties is going to renovations rather than new infrastructure projects. Also keep in mind, this is not technically stimulus, but rather this is just allocations that they announce every year. So I'd be wary of any news articles trying to pass this off as stimulus. The other key piece of news was, of course, the authorization to draft new security laws aimed at quelling the ongoing protests in Hong Kong. So far, what we do know is that the proposed legal framework will, quote unquote, prevent, stop, and punish any act to split the country, subvert state power, and carry out terrorist activities. And the bill will also bar any, quote unquote, activities of foreign and external forces to interfere in Hong Kong's affairs.
So let me
And
hold on. So let me ask you this. If there are protests in Hong Kong on the street, like we saw so much of in 2019, let's suppose they happen on this weekend. I understand this is only a draft proposal at this time, and it will eventually get passed. But what's going to happen? What should we expect if there are people on the street in Hong Kong protesting?
I think the Hang Seng spoke to what will happen this overnight. Like markets have not taken it well, with the Hang Seng down 5.5% in today's session, because the worry is that these new laws could bypass Hong Kong legislation, essentially allowing Chinese national law to be implemented in Hong Kong. So the implication here is that it could be the start of control expansion. From a market perspective, I've seen a lot of value investors keep repeating about how Hong Kong equities are cheap, to which I would say, well, this is one of the reasons why they've been cheap. And in terms of any significant investment and capex growth in Hong Kong that may have been factored in for the next couple of years, I think that has to get slashed if this escalates. So I think overall, this just reinforces why US dollar continues to strengthen against most currencies and why more money continues to flow into the US relative to other markets. There's just no safer region for money to be right now. So if you're going to be allocating capital out to Hong Kong or China for that matter, just know the risks.
So
For
from
this
a
morning,
sorry, so from a technical standpoint, looking at this Alibaba chart, you know Alibaba is also listed in Hong Kong, right? They did a large
yep,
capital raise in Hong Kong last year successfully. So if Hong Kong equity markets continue to stay weak, down 5.6% last night, and do not bounce back, can we expect Alibaba to rally in the US when the other side of the earth basically continues to stay weak, whether it's from protest or people simply going to sidelines on concerns about integration with China? That's the real question, right? From a trading standpoint, it becomes we need to factor in whether any kind of overseas selling will have an impact on Alibaba in the US. So that's the first question. And the second question is whether we're going to see, any kind of legislature to be passed in the House in the US as well that's going to impact not just Alibaba, but a lot of other Chinese stocks as well. So there are two key hangovers on a lot of these Chinese names suddenly at this point. I guess it's to be determined. But all I can say for now, technically, this does still look like it has room to the upside, whether it happens or not. And then option activity has been absolutely robust in Alibaba. Ridiculous amount of call option activity has been bought in the stock for quite some time, particularly in the month of September, where accumulations has been in July and September. These 11,000 call open interest at the 205 strike, and then in July, over 20,000 open interest in the 220 strike. I guess it's to be seen whether this can actually overcome all that weakness overseas. Final thoughts on this one?
Personally, I'm on the sidelines because this is a binary situation. We don't know how the US is going to react. So to me, there's no edge. If I were to go long here, it's just a gamble.
Yeah, I agree with that. That's what makes it difficult. All right, another sector that I'm watching closely, folks. If you look at today's first read, you're going to see that there is a note. There is an upgrade note that is for MLM. Where did it go? Right here. JP Morgan is upgrading Martin Marietta with a 17% upside into year end. And not only that, they're also pretty bullish on Vulcan Material, VMC. and Eagle Material, which I believe is symbol EXP, but I have to check. Eagle Materials, and for this entire construction group, they see valuations being quite attractive. They also see that potential passing of the catalyst, which will be the third, fourth, fifth, whatever that larger stimulus package is that is coming out from the House, most likely to be passed sometime in July. That's going to include a large component for the infrastructure spending, and so that also could be bullish. There's a lot of takeaways, and this group also plays into the bullish views about the housing that Chronicle covered recently, as well as just the rotation part that we have covered from growth to value. I'm looking at some of these charts. MLM. Did we have, the question is, was the sell-off last week that we saw was a successful retest of the March lows? It appears that way because we saw a large reversal off that lows with a big bullish engulfing candle. So there is MLM. And then if you look at VMC, similar kind of a technical setup there. All right. And here's Eagle Material, which has a nicer looking chart, and it's already starting to break out from this level. It's not waiting for the others to join. So keep an eye on this entire group. It could provide some upside going forward from here, and I'll cover more thoughts or if I see any kind of pickup in option activity. This is how Raytheon or some of the other industrials and transportation stocks such as UPS that we covered yesterday, they have all looked after a successful retest of the March lows last week and then a bounce back. So that's the group that I'm watching. Avo, what do you have on your watch list?
I just saw this morning. It's APLS Pharma. APLS is the ticker, and this was a first quarter pick by myself for January, which frankly seems like was 4 lifetimes away since.
Great looking chart here.
Yeah, I kind of keep track of this here and there and see if there's any options activity, though I haven't seen any. And just overnight, by the looks of it, they released some information that they were about NDA filing that is ahead in the second half without a date. And also they will be presenting at the European Hematology Association's meeting, which runs June 11th to the 21st this year. I think this is taking place virtually instead of human-to-human contact. In any case, the release or the presentation will be on PNH, which is it's a rare blood disease. And the only approved treatment at this time is Alexion's Soliris and the second one, that Ultomiris. So Alexion has 2 treatments. The first one was Soliris, and it has a lot of side effects. So they came out with Ultomiris, which is a little bit more improved. But Apellis, this is recent. Like I said, I just just looking at it right now, so I can't remember the drug name. But their treatment, APL2 is the code name for this, was actually, it gave better results, and there's a readout coming out for phase 3.
And when is that?
What's that?
When is that readout?
Oh, during the AHA, so June 11th to 21st. I don't know what day they present. So I think that this is a good stock. This is a good company, a good product that is going to offer serious competition to Alexion, because the readouts were better than Alexion's product, even standalone, if I remember. So it's almost a stock. What's that?
The catalyst is in about 3 weeks, right? And we need to monitor for any kind of pickup in option activity on this one during this time.
Yeah, but it's a great chart setup. Good company and a good product, and an NDA filing in the second half. I don't know, maybe worth to look into this and squirrel away some stock. But like I said, if I remember, there wasn't a lot of options traded on this previously either, so we may not see options activity.
Yeah, I love this. I love the technical view here. I think the stock with that 34 right now, I think this can easily go to $40 per share. This was a power candle breakout yesterday.
And the treatment itself is $500,000 a year. That this is Alexion's price, so this is not, it's not Tylenol.
There's a MACD and RSI bull cross. Both of them are curling higher. Technically, this looks great. And to go from 34 to 40, you're talking about $5.50 move as a percentage, about 15% of the underlying. And that's nice to capture with the catalyst coming up in June. I keep bringing up this in front of me on my screen because for those who do not know, in the first quarter of 2020, this year, we made this as a top pick, and we recommended buying the stock at 29, and then buying put options, married puts, we call it, basically as a hedge to continue to ride that. And this was a beautiful trade because you can see that within a few days after the year started, we had the catalyst come out that we were expecting the stock at a huge breakout, went all the way up to $45 per share. So that position was up 35% after including the cost of those puts that we had recommended. And then after that, naturally, with the market sell-off in March, whoosh down, this came all the way back down. So this is a nice leg higher, one to watch going forward with catalyst coming up, and we'll keep an eye on this one. Jay, what do you have?
So today I have Tandem Diabetes. TNDM is the symbol. So note that they have an annual meeting, a virtual annual meeting coming up next week on May 27th. So first off, technically speaking, and we covered this in Jaguar Live back on May 14th, but at that time there was the risk of a double top. However, there was support right around the $80 level, and sure enough, it retraced back to that and then ultimately has bounced since, ultimately making this a cup and handle formation. And I know, Fahad, you had said your target at that time on May 14th, you had said this could easily run up to $100.
Yeah.
Now, from the fundamental point of view, mid-month, they presented at the B of A healthcare conference. And the one takeaway from that conference was in terms of Q2 guidance. Right now, their guidance calls for 85 million, which B of A calls conservative. And that is because it does not assume a recovery into June, but the data points that B of A has collected on the entire diabetes industry regarding telemedicine visits and remote patient starts have been trending positive. So like I said, that 85 million is now a conservative number. And then yesterday, Medtronic reported their earnings, and there were two disclosures that Medtronic made that could be positive for Tandem. Number one, Medtronic said that their 780G system is not going to be approved in the US until later in their fiscal year. So you're looking at a 6 to 9 month delay. And then secondly, Medtronic backed away from its expectation that this 780G system was going to present a time in range of around 80%. And time in range is basically, it tells the individual what their glucose level is at that time. So B of A in a note today said the delay, the 6 to 9 month delay, is more meaningful for Tandem because it just says Tandem is going to continue to gain market share, and even when this approval does happen, doctors, patients still have to evaluate Medtronic's system, and there's no guarantee there.
Very good. So this basically buys them enough time to keep taking market share. That's 6 to 9 months at a time when this industry is actually doing pretty strong. We saw the numbers out of Dexcom, for example, and others as well. Medtronic seems to always be lagging. This is not the first time I've noticed this over the years. They've always been lagging in getting any kind of a good product out in the market in the diabetes space. So interesting. Now, purely technically looking, this is how I would read this chart. You see this breakout that happened through $80 per share. Look at the power behind this. Look at the volume behind this. We saw a series of green candles, and we saw volume surge. Naturally, it encapsulated the earnings also at the time, but even a day or 2 days after earnings, this was still under heavy accumulation. So the bulls that were buying it out over here at 80, they're going to continue to defend this name whenever it pulls back to 80. And you can see that the consolidation that has followed since then has been on lighter volume, and multiple times it has pulled back to 80 and it has been defended at that level. So that's how I see it. So $80 is an easy stop on this one. It's stock at 87, and I do think that eventually this thing is going to break out through 90 and it's going to make a run towards 100. So the easiest thing to do is to, if you're going long here, you could put a stop at 80, or you could wait for a clean technical breakout on high volume through 90 and then just play the trend at that point and shoot for $100 per share. So that's how I would read it. You can also put the technical trend on this, and you can see this is a very easy clean of higher highs and higher lows trend that has emerged. So lots of positive ways to look at this chart as well. So excellent. That's it, right? We can end here.
Yeah,
I'm all done.
I'm good. Unless you have anything else to add yourself, Fahad?
No, it's gonna be a slow day. I'm not expecting much, and let's just all of us just enjoy the next 3 days of holidays. All right. So thank you everybody for joining. I will see you in the chat room shortly.